wabarakatuh. My name is Nurul Hidayah and I will present about company background of Sunway Berhad. Sunway Berhad is headquartered in Bandar Sunway, Selangor, and the group was established in 1974. Sunway Berhad is one of the Malaysian leading conglomerates with diversified operation in property, construction, education, healthcare, hospitality and leisure. It's publicly listed on Bursa Malaysia and is known for pioneering integrated townships and sustainable development. The group operates under the core value of integrity, humility and excellence. With operations across more than 50 locations in worldwide, it continues to expand regionally while maintaining a strong commitment to innovation, quality service and community well-being. Next, I will explain about what is MFRS 8. MFRS 8 operating segments is a financial reporting standard that requires company to disclose information about the different business segments they operate in. The main objective is to give users of financial statements, such as investors and creditors, a clear view how the company is structured internally and how each segment contributes to the overall performance. According to MFRS 8, an operating segment is a part of a company that earns revenue, incurs expenses, and has its financial result regularly reviewed by the company's top management, CODM, which known as the Chief Operating Decision Maker. A segment becomes reportable if it meets certain criteria such as contributing at least 10% of the company's total revenue, profit or loss, or assets. The company must also ensure that at least 75% of its total external revenue is covered by these reportable segments. MFRS 8 also requires detailed disclosure of each reportable segment's revenue, profit or loss, and assets, along with reconciliation to the overall financial statements. These disclosures help users better understand which part of the companies are performing well and which carry more risk. Ultimately, MFRS 8 improves transparency, accountability, and decision-making by aligning external reporting with how management actually runs the business.
Next, Chief Operating Decision Maker, CODM. CODM is a function which consists of either individual or group of people to allocate resources and assess the performance of operating segments. They are positioned to be the highest level of decision-making authority within the company regarding operational matters. In Sunway Berhad, Tan Sri Dr. Jeffrey Cheh Fook Lim is the founder and the current chairman, while Datin Paduka Serena Cheh Yanti is the executive chairman of the company. Both of them are a part of the board of directors of Sunway Berhad.
Next, I will explain about types of segments. Types of segment can be divided into two categories. The first segment is by business segment. It depends on individual product or service or a group of related product or services. Sunway Berhad has 7 segments, which is property development, property investment, construction, healthcare, trading in manufacturing, quarry, investment holdings and others. This is a snippet from Sunway Berhad for Business Segmental Report. It shows that how the company performance. Each row represents a key business segment showing how much company earn. From this snippet, property development and construction of Sunway Berhad bringing the most revenue.
The second type of segment is geographical segment. Geographical segment means organization operates their business in a particular economic environment to provide products or service to individual while being subjected to different risk and return from other economic environment. Easily said, it refers to organization that operates their business in different regions of the world, such as city or country. Sunway Berhad established their business in multiple countries in the world. including Malaysia, Singapore, China, India, Australia, Indonesia, United Kingdom, and other countries. This is a snippet of notes to the financial statement published by Sunway Berhad at the end of the year 2024. The company fully disclosed about the revenue and profit or loss earned by each countries in which they operate in. The company also present about the amount of asset, both current and non-current, each segment invests in. It is apparent that Malaysia as a headquarter dominates and conquer the percentage of revenue, profit, and asset out of total. Over 90% of the total revenue is derived from Malaysia, and more than 80% of the total profit earned by the company is received from the operation held in Malaysia. Management of a company is required to disclose about relevant information so that it will benefit the users of financial statements by providing a clear view and transparency on the financial status of the company. There are two key benefits of segmental reporting, which is it will improve decision-making process and evaluate the performance of each sectors. Segmental reporting gives a clear vision on the status of each segment. Therefore, it will be accessible for management to assess the efficiency of the segments and implement strategic decisions that is suitable for the current performance of the segment. Furthermore, it will be easy for management to evaluate the performance of each sectors by identifying which sectors face growth or underperformance. Management are also able to compare between different segments or competitors in the same industry.
FAR 134 defines interim report as financial report for period shorter than a full financial year. This can be quarterly, semi-annually, or even bi-monthly. So, why are interim reports are important? They are served to increase communication between companies and the public, especially investors. These interim reports also provide up-to-date financial information in between the annual report period, helping investors to make a decision timely. Recognition and measurement in interim reporting follow the same principle as annual report. FAR 134 prescribes that revenue, expense, and financial transactions should be recognized on a year-to-date basis. Any unusual or non-recurring item must be clearly disclosed along with adjustment to prior period figures when it necessary.
Next, Sunway Berhad have two significant events that includes quarterly revenue from the construction segment that doubles to RM 1.0998 billion in the fourth quarter 2024 versus RM 532.8 million a year ago. This segment profit before tax soared 86% to RM 116.7 million in the year 2024 from RM 62.76 million a year earlier. The significant increase in the construction segment contribution was primarily driven by the accelerated progress of data center project.
Secondly, the significant event of Sunway Berhad derives from the recognition of a fair value gain in financial instrument in fourth quarter financial year 2024. This comes with the recognition of fair value gain of 340 million from the redemption of an investment, specifically from perpetual notes. Not to mention, the substantial increase was also fueled by the acquisition of 9 new investment properties during the year and fair value gains of more than 170 million. All the acquisitions are yet accretive to Sunway Real Estate Investment Trust portfolio and are expected to enhance its performance and dividend per unit further in 2025.
This is the interim period for Sunway Berhad. The current interim report for statement of financial position will start at the end of the current period, which is 31st December 2024, and the comparative will start at the end of immediate preceding financial year, which is 31st December 2023. Next, for the statement of profit and loss and other comprehensive income,
The fourth quarter, which is 3 months, will be taken at the current interim report starting from 1st October until 31st December 2024. For the comparative, it will start at 1st October until 31st December 2023. For the cumulative, which is 12 months, current interim report will start at 1st January until 31st December 2024, and the comparative will start at the 1st January until 31st December 2023. Next, for the statement of changes in equity, both will take the cumulative interim report, which is the current interim report start at 1st January until 31st December 2024, and the comparative will start at 1st January until 31st December 2023. It will also be the same for statement of cash flow, which will be taken at cumulative for the current interim report, which is start at 1st January until 31st December 2024, and for the comparative, it will start at 1st January until 31st December 2023.